Well, good morning, everyone, and thank you for joining us for the year-end close with DynamicsGP. We're going to get started here very shortly. So with that, let's go through, and I'll bring up our agenda for today. So we'll start with a brief introduction with who's on the line doing the presentation today, and then we'll take you through the order of operations that you want to follow in general for your year-end close process, and then we will get into specifics within each of the modules that do require a close. We'll also talk about some third-party products and some additional steps that have to be taken there, and then we'll end with some other considerations before going into the question and answers section. So my name is Stephen Jester, and I am the ERP Group Manager here at Integrated System Solutions. I've been doing implementation of ERP systems and managing ERP systems for the last 17 years. My primary role with all of you folks as our customer base is to engage in project management, whether it's an implementation or a customer reporting need or something of that nature. And on the call with me today, we have Steve Pena. And Steve is one of our senior Great Plains consultants, and he's been supporting the product for a little over 8 years now. And his primary role is he does implementations and support as well as business intelligence reporting for our clients. So with that, I am going to turn things over to Steve, and he is going to start the discussion on the year-end close.
Okay. Thank you, Stephen. This is Steve Pena with Integrated System Solutions, and this morning I'm going to talk to everybody about closing the year in DynamicsGP. As Stephen mentioned, there is an order of operations to consider when closing the modules, and the first thing to do is post all of your 2013 transactions before moving forward with closing any of the modules. You really want to post everything, capture all the data for 2013 before moving forward. Second thing you want to do is at each step, and you'll see that throughout the presentation, I'm going to outline a couple areas where you might want to grab a backup, is to actually take a backup so that if there are any unanticipated power fluctuations or any sort of issues during the year-end close, you can quickly restore backup and give it a go. There is a specific closing order when closing DynamicsGP, and the order is stated below. First thing to do is close inventory management, followed by accounts receivable, accounts payable, payroll, fixed assets, analytical accounting, and general ledger. Also, the year-end is a good time to perform any maintenance that you might not have done in a while, or maybe some things that you haven't considered. Specifically, at the year-end is a good time to archive or purge completed or canceled transactions. This could include any old sales orders, any old invoices that have been hanging out there for years and years. Same with purchase orders. There are a couple utilities where you can actually close purchase orders. When purchase orders are fully received, they are closed, but in the back end they are still sitting in an open state, and there are some utilities where we can actually push those purchase orders to a closed state and even purge them if they're no longer necessary. The same goes with manufacturing orders. There are utilities in there to just get rid of these manufacturing orders that may have been sitting out there for years and years that could potentially be taking up valuable space in your database, and just cleaning up these transactions could help your database run at an optimal performance. And there are also built-in utilities in DynamicsGP to reconcile data. So that's another good time to reconcile your data, make sure all the tables are synced up correctly, everything is running at optimal performance. And if you need any assistance with that, we can definitely help you out. Just go ahead and contact us, and we'll be covering that later on during the meeting. So I'm just going to jump right into it here and talk about inventory. So inventory is the first module that you want to close. And a lot of the subledgers are what are considered to be soft closes in the sense that they don't necessarily affect any data, any transactional data. Rather, what they do is they transfer current year amounts, such as quantities and costs and amounts, from the current year to the last year. And they also update an inventory. It updates the amounts and the items beginning quantity field to the quantity on hand field at each site, which is important for certain reports, specifically if you do run the inventory turnover report. And closing the inventory year also zeros quantities sold and the item quantities as well. Also, when talking about inventory, receivables, and payables management, the closing is date sensitive. And what I mean by that is you really need to close the modules before posting any transactions to 2014. And the reason that is if you think about it, if you post a transaction on January 1st, 2014, let's say it's a sales invoice, and you post that transaction before you actually close the year, well, guess what? That transaction is going to be considered a 2013 transaction. So the views in your smart list, for example, and the amount since last close view are going to be off. So that's why it's important to close the year, the subledgers specifically, prior to posting any transactions to 2014. And I'm going to give you a visual of what I'm referring to. Specifically, you have an item, and if you open up the item history window, what I'm referring to are these current year buckets here. So when you close the year, the current year totals here are going to be pushed over to the last year column, and you're going to start fresh with the current year. And this holds the same for other views throughout the system as well as several smart list objects that we can cover later on in the presentation. Let's go ahead and talk about the order of events. So as stated before, you want to make sure that you post all the transactions in the sales order module, purchase order module, manufacturing module, and for that module, really that integrates with inventory so that you're really capturing all those transactions in your inventory bucket for 2013 before you move forward and close the year. Secondly, you want to print key reports for your permanent records just so you have a good snapshot of where you were on 12/31/2013. And a good example in the inventory module is you want to print your stock status report, which really is going to tell you what you had on hand on 12/31/2013, so you can refer back to that report if necessary. Similarly, you want to print the historical inventory trial balance, which is a great report to tell you what your inventory valuation is going to be on 12/31/2013. So again, you want to just pull up this report and just go ahead and print out a hard copy of it, save it somewhere out on your network or somewhere where you're not going to lose it, so you can always refer back to that report at a later time if need be. Optionally, you can perform a stock count if you have the time and resources to do so. It's recommended, of course. It's not required. And this is a good time to go ahead and take a quick backup of your database before you actually come into the inventory module and perform the year-end close. So most of the year-end close windows are going to be found under your routines menu. So with inventory, notice that there are a few options that you can choose to do at the same time that you close the year. Let's touch on these. You can remove discontinued items. So if you have a large inventory and if you've marked several items as discontinued, and if the items don't have any on-hand quantities, you can mark that, and the system will go through and remove those items as part of the year-end close, which comes in handy. Same as sold lot attributes. If you have if you received a lot with a certain attribute and that lot has since been completely sold, you can mark that box and those attributes will be removed as well at the end of the year. You can also choose to remove any sold inventory receipt tiers, which basically looks at all your receipt tiers, and if they've been completely sold, you can choose a date as well to remove up to, which also just goes in and if you have a large volume of transactions, you can remove those receipt tiers as well, just to keep everything nice and nice and clean. And if you are on a periodic valuation method, you can also update the item standard cost to the current cost. So those are all options. You don't have to do any of them if you don't like. They could be done at another time. And once you select those options, you just click the process button, and you're on your way, and the inventory module will then be closed. So let's go ahead and talk about accounts receivable and receivables management here. So what happens when you close receivables management? Well, the receivables management year-end close window actually has a fiscal year close and a calendar year close. Well, if your fiscal year is a calendar year, then these two things are essentially the same, and all you have to do is just mark one button, and it closes both years for you. However, if you are on a fiscal, or if your fiscal year is different than your calendar year, you can run them independently. And when you close the fiscal year, what it does is it transfers all the amounts other than the year-to-date finance charges to the last year column in the amount since last close view. And when you close the calendar year, it transfers the calendar year-to-date finance charges to the last year column in the finance charges window. Just like inventory management, or just like inventory, receivables is date sensitive in the sense that you need to close the year prior to posting any transactions in 2014 just to keep everything running smoothly. And just to give you a couple visuals here, just to illustrate why it's important to close before posting any future transactions, is if I wanted to run like an average days to pay smart list here, columns such as average days to pay and total sales year to date and total sales last year, these are all dependent on the timing of the year-end close. So if you post transactions in 2014 prior to closing 2013, these totals are going to be off. So just note that there are scripts available if you cannot do this that can be run, but of course it is much better, and it's recommended to definitely close at the end of the year as to avoid having to run those scripts. The order of events for receivables management, just like inventory, you want to post all of your sales order processing transactions. Your invoices and sales order processing is, of course, they carry over to your receivables management tables. You want to just post all of your invoices, all your cash receipts, anything that needs to be posted from 2013. Just make sure it's posted before you actually close the module. And if you do need to enter something for 2014, if it just really needs to get into the system, just enter it into a batch and save the batch. You can future date the transactions, just enter them and save them, and as soon as the year is closed, you can go ahead and post them. You're going to want to print your key reports. Now I'm talking about receivables management. If nothing else, you want to just come in here and print an age trial balance report, which will basically tell you what your customers owed you as of the end of the year, 2013. So you're just going to want to go ahead and print that and save a copy to your permanent records, save it out there somewhere on the network, or if the report isn't too big, you could just print a hard copy. You're going to want to back up your data, and then once your data is backed up, you just need to come into your routines here, year-end close, and as I mentioned before, if your fiscal year is the same as your calendar year, then it's already marked all for you, and all you have to do is click process. It'll close your year and it'll print you a report. So you also want to save that report for your permanent records as well. Payables management is very similar to receivables management in terms of the closing procedures. There is a calendar year close and a fiscal year close. So if they are different, and if you choose to close your calendar year independently, that is going to transfer your 1099 amounts from the year-to-date to the last year column in the amount since last close view. And closing the fiscal year transfers all other amounts other than the 1099 amounts from the year-to-date to the last year column in the amount since last close view. And just like receivables, payables is date sensitive, make sure you don't post any 2014 transactions prior to closing the year, and make sure you post all your 2013 transactions before closing the year. Order of events. This is important here. before you print your 1099s, there is an update available that needs to be installed on your system so that your 1099s print correctly. Now, someone from our technical team is going to be reaching out to everybody to make sure that we get that 1099 update loaded so that when it's time to print your 1099s, you can print them without any issue. And if you are on an older version of GP, we actually created a customization package that we can help you deploy to get the correct form printed for you as well. So once that is loaded, and I just want to throw it out there that you can definitely close payables management without loading 1099, but you can't print your 1099s before loading the update. So you want to make sure that all of your purchase order transactions are posted. Specifically, you want to, if you have any invoices that need to be matched up with the receipt, you definitely want to post those so that flow down to payables management. And in payables management itself, you want to just make sure that you post all your vouchers, cutting your check runs, any other transactions in payables for 2013. You're also going to want to print your key reports. A key report, if nothing else, you're going to want to print your H trial balance so you can refer back to it and see what your AP standing was as of 12/31/2013. You're going to then want to go in and do your 1099 printing, although you may do this after the year-end close, but it is have the availability and everything was ready to go. You can definitely come in and print the 1099s as you're closing the year. But if you do want to print your 1099s in January, 1099 printing again is under the routines menu, just as the year-end close is. So you want to come in here and just make sure that everything is correct. Of course, you want to make sure you're closing the correct year. You want to choose the right 1099 type and choose your form, whether if it's a continuous feed or if it's a laser printer. Put the single feed in there, and you have the option to select the vendor range and just go ahead and print your 1099 forms. And once the 1099s have been printed, simply come down to the year-end close window. Same situation that we had with receivables. If your calendar year and fiscal year are the same, you can just mark the all button and process, or you can close the years individually, the years being the fiscal year and the calendar year. After you close receivables and payables, you need to come in and close the tax year. And what I mean by the tax year is your sales and or purchase tax year. You really need to make sure that the receivables and payables modules are closed first before closing the tax year. So when you go in and close the tax year, it's going to it would have captured all of the taxes for 2013, and it'll move the taxable sales and purchase dollars from the current year to the last year. And before you do this, of course, you want to make sure you do a backup. And if you've never closed a tax year before, it's actually under the company menu, so you're going to want to come to your routines, company, and here you'll find the tax year end close. So it's just as simple as clicking the close year button and processing it, and you'll get a report of the information. Okay, if anybody uses payroll out there, we're going to cover the payroll year-end closing here right quick. Just one important thing that we wanted to throw out there is before you can close payroll, you have to install the 2013 U.S. payroll year-end update. So our technical team has already reached out to just about everybody who does own payroll, but if that has not yet been installed, we'll get in contact with you to make sure we schedule a time to get that year-end update loaded. Once the update is loaded, you want to make sure that all pay runs for 2013 are done. And once the pay runs are finished, you can go ahead and create your year-end wage file. And once you create the wage file, you can actually go in and verify the W-2 and the 1099-R information and edit if necessary. And once the information is good to go, you can go ahead and print the W-2 statements and the W-3 transmittal form. You can print your 1099-R forms and the 1096 transmittal form. Once you've closed the year and printed out all your forms, you need to make sure that you go and load the 2014 tax table update so that your taxes are calculated correctly starting in 2014. And just as with everything else, the payroll close is under routines, and they actually set it up for you in order here. So it's pretty straightforward. When you come under the routines, they basically list the order in which you need to do everything. So for example, the first step, of course, would be to get the payroll update loaded, and then you can start by creating your year-end wage file, and then moving down the line and printing all of your forms. Fixed assets is another common module that sometimes people might overlook when doing the close, but it is a very good practice to close fixed assets. What it does is similar to the other modules, is it is a soft close, but it does update several key fields in the asset general information, such as the year-to-date maintenance amount. The quantity is copied to the beginning quantity field, and then in your books, the year-to-date depreciation is cleared. The cost basis is copied to the beginning year field. Your life-to-date depreciation gets copied over to the beginning reserve field, and the salvage value field gets copied to the beginning salvage value, and it will increase the years for you. So let's talk about the steps in closing fixed assets. Just like all the other modules, you want to make sure that all of your transactions for the year have been entered, whether it's entering any new assets, or if you need to receive any assets from the purchase order or accounts payable module. You want to make sure all those transactions are captured. From there, you want to make sure that you depreciate all assets through the end of the year, so that it rolls through and captures all of the depreciation for the year. Then in fixed assets, there is a GL posting function that actually needs to be run in order to capture the information from fixed assets and send the GL information over to the GL. So you want to make sure that you perform the GL posting. Once the GL posting is done, run any key reports for your fixed assets. Verify that your quarters are set up correctly, and then lastly, perform the fixed assets year end. And one important note: when you are closing your fixed assets, you want to be sure to close all of your books, as seen down here. You can have all of your available books. Make sure that you close all of them, even if you haven't used them. The system requires that you close them all before you move on to the next year. And just if you are wondering, the fixed asset GL posting is also under the routine. So a lot of people using fixed assets forget to do this. A lot of the times they'll wonder why their GL hasn't been updated with information from fixed assets. A lot of the times they have the information sitting right here in the GL posting bucket. Analytical accounting is another module that is used. There is no separate year-end process for analytical accounting. When you run the GL close, GL is actually able to go in and push the analytical accounting balances forward as well, so long as the AA dimensions were properly marked to have a BBF, or a balance brought forward. Once in a while, you will come across an issue, not so much anymore, but on older versions there were issues with analytical accounting. If you do own analytical accounting or come across any issues closing the year, please call us and we can help you, as the resolution can be technical in nature. Okay, so let's talk about the last step here, which is your GL close. Your GL close is actually considered a hard close, in the sense that it actually does create transaction, and it pushes data from the current year to the next year forward. So specifically what the GL year-end close does is it takes all of your profit and loss accounts and it zeroes them out, pushes them over to the retained earnings account. It then takes all of your balance sheet accounts and pushes them forward to the new year. And it also gives you a year-end report, which you also want to make sure that you print, keep for your permanent records. So let's go ahead and talk about the steps in closing GL. So after everything else has been posted from all the modules, you want to go ahead and make any final adjusting journal entries. And I just want to point out that unlike the modules that the subledgers that have to be closed at the end of the year, general ledger can actually be closed at any time, really. The thing that you need to consider, though, is if you don't close your GL, then some of your financial reports will be off because your balance sheet accounts are not pushed forward until the GL year-end is done. So keep that in mind. Another important thing that you have to consider when closing the GL year is you want to make sure that your GL accounts are set up correctly. And specifically what I mean is if I open up my smart list here and my types and my posting type. Really, it's just a matter of coming through your chart of accounts, and you want to make sure that your accounts are set up correctly. Basically, if it is a balance sheet account, make sure it's a balance sheet account. P&L account, make sure it's set up as a profit and loss account. Because what happens if they are set up incorrectly? Well, if it's a profit and loss account and it's set up as a balance sheet account instead of closing out to retain earnings, that amount is going to be pushed forward, and you're going to have to then go in and correct it, which can be a little time consuming. So it will behoove you to print this list, review it, and make sure all of your accounts are set up correctly before closing the year. Again, print your key financial reports. If nothing else, you want to make sure that you come in and print a trial balance. Now, if you print a detailed or a summary, it's really up to you. Of course, the detailed report contains all the details under the accounts, whereas a summary just gives you a one-line summary for each account. Either way, whichever one you decide to print, make sure you print it and keep a copy of it for your permanent records. You definitely want to make sure that you set up a new fiscal year. If anybody hasn't created a fiscal year before, that's really a company function. So you want to come in here and make sure that your fiscal year is set up and ready to go. I am in my test company, which actually has years to 2019, but creating a new year is very simple. You just plug in the new year that you want to create, and you click calculate, and you're pretty much good to go. On that note, as you go through and close the subledgers as well as the general ledger, you can definitely go through and mark each fiscal period as closed. So if you have closed all of your ledgers, you can just mark them, and what that does is it just prevents users from going through each module and posting any transactions after you've already updated your transaction and verified that your reports and everything else are correct. So this is also a soft close in the sense that just basically marking the modules as closed prevents anybody from posting to the periods. And if at any time you did need to go in and update the modules, you can simply just come back into this window and uncheck them. So that's under your fiscal period setup. You definitely need to do a backup before you close your general ledger. There's been times when people call and saying that there's some sort of power outage or some sort of interruption during the process, and fixing it is it's very involved. So you really want to make sure you do a backup before you close the GL year, because it will save you a lot of time if there are any type of interruptions during the close. So the actual year-end close, again, is under your routines. So you want to make sure that your retained earnings account is accounts will wash out to. It's going to give you your next starting journal entry number there. And with the close, there are a couple options that you can choose. If you had any unused segments, you can choose to mark this button right here. And during the close, if there are any unused segments, they will be removed. If you have any inactive accounts and you didn't want to keep them, well, actually I should say if you do want to keep your inactive accounts, make sure that you mark this box. So kind of beware that these boxes are unmarked by default, and by default unmarking it says that it's going to not maintain it by not marking it. So you might consider that you do have inactive accounts, but if you're using them in your budgets, you still might want to keep them in the system. So marking this button to preserve the inactive accounts will then allow you to keep the budget's amounts, or just keep all inactive accounts, period. So once you've made your selections, you just click close the year, and you actually now have a status bar that will show you the status of the close. And once the close is complete, it's going to give you a year-end close report, which you definitely want to print and keep for your permanent records. After you've closed the year, it's a good idea to maybe take a little bit of time and run through some of your key reports in FRX and Management Reporter. If you did have the year hard-coded in any of those reports, you're going to need to go in there and update that year to use 2014 as opposed to 2013. And it's also a good idea to print any key reports in Management Reporter prior to closing the year as well, just so you have a permanent copy of those as well. All right. There are several additional modules out there that are used by several of our clients, and each module has closing procedures. We'll just touch on a couple of them, a couple of the more popular modules. OneSoft Job Cost has a closing module, so we can definitely help you with that. But for the most part, you just want to make sure that any job cost transactions out there are posted for the year, and you want to make sure that there aren't any unposted transactions for the year. So once you're sure that both conditions are met, you can go ahead and close the year. And basically what it does is it just moves all the previous year transactions and reclasses them as prior year transactions for reporting purposes within the module. Multi-entity management is also closed as part of the GL closing. The one thing to consider, though, is you can most likely you're going to want to close to a divisional retained earnings account so that you'll get a correct closing for each segment or each entity within the system. So if that's not set up for you, then you might want to take some time to ensure that that is all set up correctly. So when you do go to close your year, the closing will be correctly done for each company and or segment. So with that, I'm going to go ahead and pass the presentation back to Stephen Jester, and we'll be doing some Q&A shortly here.
Thank you, Steve, for that. So I had a couple more things to talk about, and then we've already had some great questions throughout the presentation that I want to share with everyone, and then we'll open it up for more questions. But just in general, as you're getting ready for next year, some things that we can help you with. If you have never done a year-end close before and you would like a resource available to you, reach out to us, let us know when you're going to be going through the process, and we will try to schedule somebody to be available either in-house or on-site. For those of you that do print 1099s out of Great Plains and or use the payroll module, as Steve pointed out, there are some updates that need to be installed into your system. On the 1099s, if you're on GP 2010 or 2013, there's a service pack related to that. If you're on an older version, we've created a modified version of the 1099 form to accommodate the 2013 layouts, and we can help you get that installed onto your system. Now, Steve was showing everything in Great Plains 2013. That was the version he was using for the demonstration, and some of you may be on older versions, but if you're current on your subscription, you can get upgraded to GP 2013, and that is also something we'd be happy to help you folks accomplish. And the last thing I wanted to touch on is Convergence is coming up next year. It is going to be in Atlanta, March 4th through the 7th, and if you've never been to Convergence, it is basically a worldwide conference for the Dynamics community. So that includes users, that includes experts from Microsoft, experts from many of the third-party vendors, and many of your folks like us, your local resellers. So it's a great opportunity to kind of experience some aha moments with the product, to share and get deeper insights, and to also learn about what's going to be coming in the future for the product and what's on the horizon in terms of new. So currently Microsoft is offering a $300 discount for those that register before January 10th. And to register, you can go here to the link, which is at microsoft.com/dynamics/convergence/Atlanta 14. Okay, so question and answer time. Let me go through a few of the questions that have already come up and the answers to that, because I think it's good for everyone to know, and then we'll take additional questions at this time. So one of the questions dealt with a company who has an audit and doesn't receive their adjusting entries until about the middle of the following year. do you need to close out the general ledger? And the answer is no. So you can have multiple years open in the general ledger, so you can leave 2013 open until you get your year-end adjusting entries, and then enter those journal entries and then close the GL. You don't necessarily need to leave the other modules open unless there's some transaction you expect you need to make in a subledger, but typically they'll close all the other modules and leave GL open. Another question had to do with, along the same lines, is if you do leave the general ledger open, how do you roll your balances forward and your retained earnings forward for financial reporting? So if you are using Management Reporter or FRX to generate your financial reports, there are specific calculations that you can make to the column layouts in those two reporting tools, and essentially calculate what your retained earnings should be, and or what the beginning balance should be on the balance sheet accounts. And then you can augment your existing financial reports with that column so that you can get current numbers for 2014 until you're able to close the general ledger for the previous year. Let's see. Was another question about how do you do the backups of Great Plains. So Great Plains uses a SQL Server database, and so your backups are done at the database level using the SQL Server product. If you do not have an in-house IT staff or individuals on staff that are familiar with SQL, that is again something that we can help you do. If we implemented your Great Plains, more than likely you already have a recurring backup maintenance plan that runs at least once a day, if not more than once a day. But the timing of the year-end close is specific, so that is something where you want to make specific backups and actually archive or save those backups for a certain amount of time. If you leave them as part of your routine maintenance plan, they may get overwritten in a week's time or 2 weeks' time, and we don't want that to happen. So if you need help with that, you can certainly reach out to us. And we've also had a couple of questions about whether or not someone can get a copy of our presentation files. Our goal is to make both the PowerPoint slides available, make the presentation available as a video, and a couple of other links to other resources. So we'll be sending out a follow-up email to everyone who participated with how to access that information. Let's see. And there was a current question that is, does Great Plains allow you to reopen the GL once you close it? Yes, you can reopen the previous year once you've closed it in order to post entries back into that year. However, there are some limitations to that, and there's a very specific process that you have to follow in order for your retained earnings and beginning balances to be updated properly in the current year. So there is documentation on that we can provide you what that specific process is. And you can email me and or email our help desk if you would like that. I'll try to make that as one of the links available in our follow-up email to you. But the preferred and recommended method is, you can leave the 2013 GL open until you've made all those adjusting entries and then close the general ledger. Let's see. Another question is, if we've never closed the payables modules, will my 1099s be correct? Probably not. Typically what we do in that situation is there are some smart lists that you can run on the transaction detail in the accounts payable module to see what the correct 1099 bucket amounts should be, and then we can compare that to your 1099 report and see if those buckets are inaccurate. There is a way to clean them up. But typically what we'll do is we'll close it out, say at the end of this year you would close the payables modules so that you get a clean cutoff as Steve described on 12/31, and any of your 2014 transactions to 1099 vendors would start accumulating properly in the system. But if that is something you need help with, again, we can we can work with you on creating that smart list and identifying those discrepancies and show you the right process for getting that corrected for 2014. Okay, so another question is, does this mean we cannot enter invoices in January until AP for December is closed? So you can, as Steve alluded to, the practice is typically to enter them and save them in a batch, and they can have future posting dates for January, and then once you've closed December, then you can go ahead and post those transactions. Okay, I've got another question here. Can I enter 2014 sales invoices as well as 2013 invoices during the first week of 2014? Yes, you can. The difference is not whether you enter them, the difference is whether you post them. So you would want to enter all your 2013 invoices and post them as a 2013 date, and then close the sales or AR module for 2013 before you post your 2014 sales invoices. But you can go ahead and enter those 2014 sales invoices now and save them as a batch. You can even print them out if you need to send the invoices out. Okay, next question is, what access do we have to archived items after archiving? So that question is alluding to some of the additional processes that you may want to undertake during the year-end close process. So Steve spoke about potentially purging completed purchase orders or sales orders or manufacturing orders if you use manufacturing. And so there's two types of purges and or archives, right? So there is an archive process that moves completed transactions out of what we call the open table. So for an example, you can have an invoice that has been paid and it's still in your open table, but it's paid, it shows a zero balance. You can move that to history, and then you would be able to still access the history tables through various reports, smart lists, and inquiry screens. Once you've purged something out of the system, it is no longer there. The transaction is no longer there, but that's why we recommend having a backup before that is done. Some clients even opt to create an archive company that they could log into and access that data and keep their current company leaner with the purge. Let's see, next question is, if a sales invoice is not posted, are they available to post a cash receipt to? No. If you haven't posted the invoice, then you cannot apply the cash receipt. You can still enter the cash receipt, and again, once 2013 is closed, you can post those cash receipts, and then you can go in and apply them to the posted invoice. Let's see, will my current recurring batches in AP roll over for 2014? I believe so, but it may depend on what the recurring, like how many times you've set it to recur, and if you limited the number of recurrences. But that is something, you know, we'll get specific details for that, and I will have that sent out to the person who asked that question. But I believe they'll roll over as long as you didn't set them to end after X number of occurrences. Let's see, next question. Is convergence also good for learning about Great Plains Dynamics at an intermediate level? Yeah, they do have some great presentations, some workshops, some breakout sessions that are designed to get you in front of experts that can answer more intermediate level questions. So I think it's a great event for that type of thing. Okay, next one. Posting history is checked. Okay, the next question is if posting to history is checked in the GL setup, can you post transactions to the GL after closing? Yes, so that's similar to the question I answered before. If you've closed the year in GL and then you find out, oh, I need to post something back into that year, it can be done. There's a specific process that you follow, but yes, you do need to have that posting to history turned on in order for that process to function. If you do not have posting to history enabled, then you're going to miss that opportunity. So I'll make sure that process is available in the post email that we send out to everybody so they understand that. Let's see. So somebody asked, is purging highly recommended or not highly recommended, as transactions will not appear in the inquiry screens? So archiving is recommended. At some point, you want to move completed transactions into the history tables, and you will still have access to them. Usually on the inquiry screens, there will be a toggle button that looks at both open and or history, and so you would have to toggle between open and history. Depends on which module. Some have separate inquiry screens altogether for history. Some just have a toggle. Purging is different. Once you remove, say, if you remove voided transactions or canceled work orders, for example, once you've purged, then the data is no longer in the system and available. And so that's where having an archival company or a saved backup becomes part of the strategy. Okay, is there a process? Is the process for posting the history difficult? No, it's not difficult. There's routines and utilities to do that. However, the reason we say it's a year-end close is a good time to move stuff to history is because you do want all your users out, and you do want to have a solid backup before you undertake that. Do all users have access to the archive data? That depends on permission settings. So depending on how your security is set up, they can all have access to it, but that's a case-by-case basis. Let's see. Okay, a couple of AP questions. How do I cut checks on unposted 2014 items? I need to be able to book 2013 vouchers and pay 2014 vouchers during the first week of 2014. Yeah, so there is, you do have the ability to do that. I'll include that in our follow-up documentation because it is a specific process you want to follow. And similar question, I usually leave AP open until the 15th day of the following month. If I hold off on posting AP invoices for January, what happens when I cut checks during the first 15 days of January? Will that cause a problem? So if the invoice is not posted and you want the check to be applied to the invoice and you haven't posted the invoice, then yeah, you would essentially have to marry that up later. But again, we'll make sure we include that process. So the AP, let's see. So someone asked if we would be able to kind of give you an overall list of do's or don'ts for year-end closing, which I think is a great ideal given some of the questions that you all are asking. So we can kind of frame, in the follow-up email, we can kind of frame that information as things that you definitely don't want to do. And for some of these scenarios where you're crossing over between December and January, how are you going to process transactions without the supporting documents posted? So yes, we will include information on that.